Bright and early Thursday morning, bonds were up 8 basis points. The S&P was up 37. Bonds began the overnight session drifting very gently stronger, but began losing ground during European trade. Several central banks hiked rates as expected, thus no major reaction. Yields were a few basis points higher at the open, rose a couple more across the morning, but not because of it. Rather, it looks like bonds are slightly spooked by a big corporate bond announcement and pre-market gains in First Republic Bank, the current poster child for systematic banking concerns in the U.S. Jobless claims came in at 191,000 versus 197,000 forecast. Again, any number underneath 200,000 is seen by the market as strong, so this is even an improvement on that. It was down about 1,000 from previous. The Fed cleared up a lot for the market yesterday by confirming that inflation still matters, but that systematic banking problems also matter. Powell pointed to the latter being like a free rate hike, i.e. something that helps deliver a tightening effect to the economy without the Fed actually having to hike rates. Markets took it as a potential turning point for rate hike urgency. Basically means that they would have done 50 basis points if all this stuff wouldn't have happened, though I don't think they're done. Bonds began the day a little slightly weaker territory, but eventually turned green with help from flight to safety in Europe. A few hours later, U.S. markets did the same thing, resulting in even better gains for treasuries. Tens dropped under 3.4% briefly before bouncing back above it slightly. MBS gained more than 1/8 of a point, ending up at 0.14 better on the day at 101.11. At that level, we are just below that blue 200-day moving average, coming down with a whole bunch of floors. Kind of a wider range of right now for versus what we have on the chart. We have a lot of floors there, so I'll have to see what tomorrow's data brings. The MBA's forecast for 2023 volumes have changed. Here is the latest from the MBA on 2023 originations. They are estimating 1.8 trillion, which compared to the last couple of years is pretty small, but it's still a ton of mortgages. Intercontinental Exchange, ICE, and Black Knight filed responses officially to the federal regulator's bid to block their merger. So I'll have to see if that ends up going through with the divestiture of part of their software stack. Also, we got a post from our sponsor at WellThatMakesSense.com. This is the 31 laws. It's the second 5. So number 6 highlights it is when forced to compromise, always ask for more. Also, 7, if something is worth doing, it's worth being done right now.